We're going to get into one simple thing that I personally have used that if you can just understand and learn, which I can literally teach an infant how to do this, it will greatly improve your overall trade ideas. I don't care what strategy you use. By the end of this video, you're probably going to smack yourself in the face on how easy this is, and then by the end of it, you're just going to be like, Austin, why is this even a video? Because it's so simple. But I promise you, the most simple things within trading are probably the best, because for some reason, like when it comes to trading, we as people and humans, we think that it has to be this overly complex thing that's just going to be like rocket science and we're sitting here trying to do some crazy math. Like, no, it's none of that. Like, it's the most simple thing ever, but so many people don't even do it. That's because the trading itself is not the most difficult thing. The most difficult thing is focusing on your mind, your mental, and your psychology, and a lot of people fail that. They go on YouTube and they're searching and typing up all these amazing strategies with 90% win rates and 100% win rates, and they're still failing because they focus too much on the strategy, but not enough on mastering their own mind and their own personal who they are as a trader, and they don't even know that. So if you want to actually master that and focus on that, join my Discord in the link in the description below, where we focus on the things that truly matter when it comes to trading instead of just focusing on some flashy strategy and buying a Lambo tomorrow. So let's get into the charts and get exactly what I am talking about. So without further ado, let's get into the video right now. Okay, so like I said at the beginning of this video, I don't care what type of strategy you're using. I don't care if you're using Elliott Wave Theory, ICT, Smart Money Concepts, support and resistance indicators, Fibonacci, retracements. I don't care what strategy you're using. Like, this can be applied to whatever the heck you are using. And that's kind of a main theme I want you all to understand when it comes to my YouTube channel. So if you do get value from this, make sure you hit that subscribe and like this video. Comment down below what other types of content you would like to see. But the main theme I would love to see with this YouTube channel that I'm creating is just, it doesn't matter about a singular strategy. There's so many statistically proven strategies out there that can make money. The most important thing is within inside of your own mind. But even beyond that, when I talk about principles like this can be applied, and the content that I talk about can be applied to whatever you do when it comes to the trading in the financial markets, right? So when it comes to this, it is very, very simple. We're going to talk about the philosophy behind this and then get into some examples. So I want you to really think first, before we get into the charts, again, whatever strategy you use, Elliott Wave Theory, ICT, support resistance indicator, whatever the heck these strategies are, what is the main revolving thing behind anything you trade, right? Market structure. Market structure is like, I know a lot of people talk about how price action is king. Well, market structure should probably be like the brother of the king, right? Or whatever, bad joke. So if we can all agree that most of these strategies, it doesn't matter of what one you're using, but we can all agree that every single strategy in some way, shape, or form has some form of market structure, then you're going to love this video. So I call this the grid. I was teaching my students within the Discord. Again, link is in the description below. I was teaching them all this the other day, and a lot of light bulbs were starting to go off when they were starting to see how I trade with my specific strategy. And then they would go over here and use this, what I call, again, the grid. I don't know if anybody else has done this. If you do use this and I'm copywriting it, please just send me a commission. No, I'm joking. So what it is a very, very super stupid simple setup, okay? Literally a 4-year-old could set this up. What I want you to do is go to the 1 hour time frame. Now, again, if you are a swing trader or a higher time frame trader, again, I trade on the 15 and 5 minute chart, okay? I use the 15 minutes to kind of build my idea and then 5 minutes to execute. But if you are, I guess, a swing trader, you could go to even the higher time frame, say the 4 hour, maybe even the daily, right? But where I'm a 5 and 15 minute intraday trader, the 1 hour is plenty enough for me to then adapt that to the lower time frame. So all we're going to do is we're going to start on the beginning of each week. Okay, so now I like to trade. Right now we're looking at the US 30 over here on the 1 hour time frame, and then over here we're looking at the NASDAQ on the 1 hour time frame as well. These are the two assets that I love to trade. Okay, so for you, maybe it's not the US 30 and NAS, maybe it's gold, or maybe it's GJ, or maybe it's UJ, whatever, right? So whatever assets, you need to study these, okay? Because when it comes to trading, if you're not studying the assets that you're trading, then what the heck are you doing, right? If you're just going into the market, blindly trading off what you see, but you don't have any context of price, you will get yourself wrecked. This is what we're doing, is we're building the context of price, okay? So what does this do? What is this grid and how do I set it up and all that? So what's the main goal of this? The main goal of this is the direction and the context of price, ladies and gentlemen. So all we're going to do is we're going to go back here and we're going to start finding the first Sunday hourly candle on the week that you're about to start. Now, we just ended this week, so we're literally building my chart exactly how I would do it, because today is Sunday, as you can see here. Price and the market is about to open in 1 hour 35 minutes, right? So this is exactly what I would do. So I thought this was the perfect time to film this video so that way you all can see exactly what I do. So to make these trend lines perfectly straight, you just hold down shift and you go back to, again, the last Sunday bar. So same thing here. We're going to just click this one. There we go. And we're going to go back to Sunday. And now all we're going to do, and again, literally the only indicator you have to add is sessions on chart. So if you just go to the indicator, search sessions on chart, this is the one I use. I only trade on the New York sessions, so this is why this. But if you're looking at, say, the Tokyo, then you can do this for the Tokyo, or you can do this for Sydney or London or whatever. But I'm doing this for New York because this is specific to how I trade. So again, you can adapt this to whatever you do. So all you're going to do is you're going to go to that the first 1 hour little line here on the chart. You're going to do a vertical line, and this, I like to make it red so it stands out. And then all you're going to do is you're going to take that previous Friday high. So I like to use this little trend line so that way it doesn't go across my entire screen. I can choose where it starts and stops. And I look at the candle bodies, not the wicks. I take the candle bodies and I take the top, and again, you hold shift as you draw this to make it perfectly straight. And then this is my first high, and then this is my first low, okay? So what this is telling me is the context of price and where it's starting. So when we go into the next session, you can start to have an upper limit and lower limit on where price is most likely going to go. And again, we always like to talk about like these lagging indicators like moving averages. And while every one of those do have its place in trading, I believe this is the most accurate way, because price action market structure, guys, it is the most powerful tools on finding that context of price and finding the reason why price is doing what it's doing versus a lagging indicator like the 200 moving average, right? We always like to hear about the 200 moving average being a magnet, right? Attracting price. Well, I believe this, and I would argue that this is way more efficient at finding, I guess, acting like a magnet. So let's look at some examples here, and then we'll mark up NASDAQ as a second little example. So if you look here, this was the week of the July 31st to the beginning, the first week of August. So price broke up a little bit, right? It came up a little bit, but then boom, it came back down within this, because again, I like to say that the high and low ranges here act as a magnet, just in a very simplified state. And then again, it kind of retraced back up when it broke to the downside. Now, this does a multitude of things. And I know how simple this is, guys. I know it looks stupid simple, but it does a multitude of things. One, it gives you the context of where price is most likely going to go. Two, it gives you the context of in that session, as you're doing your pre-market analysis for that specific day, where in the world is price most likely going to go? And where is it being attracted to? So if we look back here on an example of when I was kind of using, you can even play with Fibonacci's, and that's why I was kind of using this as an example with my students here. But if you go back here on this week, so we started off, if we go on the replay mode, and we are just kind of simulating how we were doing our pre-market analysis before market open, right? So this is that first 8 o'clock a.m. EST bar. Then this is roughly where I would do my pre-market analysis, where like what most likely is going to be happening that day, right? So as I'm doing this, I'm already seeing we're kind of inside the range here between the high and the low. So this day, as we start to go on, my first instinct, right, is we don't know where price can go. We're kind of ranging. We're trying to building that context to price. Well, as that 9 o'clock candle breaks up to the upside here, now I'm seeing, okay, we closed strong on the hourly above this high. We're most likely going to keep going bullish for that session. Now, does this work 100% of the time? Absolutely not. Sometimes it completely reverses. Sometimes it does whatever the heck price wants to do. But what this is giving you is the context of where price is most likely going to go in the session that you trade. Now, I'm an intraday trader. I will open and close a trade before the day ends, right? I love doing that. I've been doing that for a while now. So I strictly only trade at the market open. So when this 9 o'clock candle ends and we're about to go into the market open, I already know we most likely at the beginning of the day will be bullish, because I only trade at market open to around noon EST. I don't really trade a lot after that, maybe sometimes depending on the setup, but most of the time that is when my cutoff is. So now we're gonna see here that as we closed above and cleared that high, this is exactly what happened. So I don't know what happened at exactly 24th of July unless I opened up my trading journal, but we're not making that whole video. This would be way too long. But what I'm trying to show you is as we're starting this day out, we already know we're probably going to rip bullish. Okay, so there's probably going to be some setups that I trade on the 5-minute time frame that will be really nice for longs. Okay, so if I find a long setup, and again, I'm not trying to be super specific to my strategy because I want this to apply to the people watching with whatever strategy you use. So if you're sitting here and whatever strategy you're using, you're finding a long setup, you can just have that added confluence that, okay, well, we've already closed above those Friday highs. If I find a long that meets my criteria for a setup with whatever I use, this will most likely agree with my overall trade. So again, you can use this and you can see that we continued bullish for quite some time until that afternoon time frame, and I would already be done for the day, right? This is literally, if I were to show you guys my trading window, this is my trade window. Okay, so I'm done. So this is why, again, this is really good for scalping and just intraday trading in general. But if you are a swing trader, you can still apply this to those higher time frames for whatever idea you have. So let's do a couple more examples. So let's go back here and you guys can really see how this works. So this was an amazing trending week, okay? And also, the tighter these boxes are, the more likelihood it is for that week to be trendy, okay? So when it breaks, just imagine, I like to tell my people that are in my Discord, imagine the more consolidated and the more packed and compact a zone is, whether it's my trading strategy or even the highs and lows of whatever, the more respected those are. Okay, so if you break up above any of this compaction, it's most likely going to have a way harder reaction to either the upside or downside, whatever it's breaking, than if it was super wide and rangy. Like if we find an example, there was a really big rangy day a while back here, like this day, right? So this week, right, beginning of June, this was super rangy, right? So you see the market was super rangy that whole week on the higher time frames because the highs and lows were absolutely crazy. But as tighter as it gets, like this example that I was showing you right here, the tighter this range is, the more likelihood of an aggressive breakout to the upside. So we've seen, again, if we use this as another type of just an added confluence, again, this isn't meant to be a trade signal or a setup or a strategy. This is just something to add to your tool belt when you're looking and analyzing the markets for whatever strategy you use. So if we go back on the 17th of July and we act like, again, I'm doing my pre-market analysis, we can just go play by play here. So this is that 8 o'clock candle. We broke to the downside. We closed below here. So my initial thought would be bearish, right? Until I let price action tell me otherwise. Now, obviously, we kind of cheated. We know what's about to happen, but I want to be honest with you because this doesn't work 100% of the time. It doesn't. No strategy, no system does, but again, it gives you that context. So at that 9 o'clock candle, again, I'm still sitting on my hands until the 9:30 a.m. candle opens for the market. So right before the market opens, that 9 o'clock candle ends, we broke right back inside range. So now again, we're at that midline of the range where we're like, okay, well, price could do either or. So boom, the 10 o'clock candle closes. We bounced a little bit below that. So again, we're just kind of fueling and checking this grid and seeing, okay, where are we at? We could either start turning bearish if we want to bounce off this high, or if we break through, we could just absolutely be super bullish for the rest of the day. We go here, so we close right on the high, so that now we're seeing we're rejecting. So again, I would already be done for the day, but we can see that this would be an example where, again, this isn't going to work 100% of the time, because as you notice in what I said is I looked back here and I was seeing, okay, well, I'm expecting it to be bearish, but it ended up going back into range. So now, obviously, we know it ended up being bullish. So then let's go to the next day. So let's go to, here's the 8 o'clock one. Now we already seen, so this is where I kind of went a little bit too fast, but this was that 9 o'clock candle. We opened and ripped absolutely bullish for US 30. So then I would know, okay, we're probably going to keep being bullish, right? We're making higher lows. It looks like we're about to make a higher high. Let's see what happens. And then it just keeps on. So we would have this really nice bullish confluence that if I did find any long setups in my lower time frames from a strategy that I'm using, I would feel that much more confident when I know that we're already super bullish on the 1 hour time frame using these highs and lows for the previous market session. And this would just, again, fuel our overall ideas. So then you would just know that in this specific session, in this specific time trading window, you can expect price to be on your side if you're going longs, again, trading with the trend, or vice versa, shorts if you're trading with the trend to the downside. So let's do this one more time, because again, I just built my overall setup for, oh, did not mean to draw that. So I built my overall setup for US 30. So let's get out of replay mode. So again, what I'm looking at here and what's kind of going through my mind going into this week of Sunday, August 13th, is we are a little bit tighter than this range, so we could see and we could be prone to a little bit of a better breakout. And again, that's what I like to trade. I like breakout trading. So we could have some really nice breakout setups this week. Again, you can audit me. You can go back in time and see if I am accurate or if this just is one of those weeks where it doesn't work out and play in my favor. So let's go to NASDAQ here and build the same thing. So we are finding on the 1 hour time frame that first Sunday candle. We draw the vertical line. We push back our trend line to end there. And this one to end there. We take and find the Friday high and low. So we take the trend line. Boom. Same thing there. And it's that easy, guys. I mean, you can now see on NASDAQ, this is a much tighter range than this. If you even use the measure tool, you can see this is 107. Use this one. This is almost double, a little over double. So again, just like I said here, I'm just going into the week and I'm not letting this dictate my trades in the sense that I'm not taking shorts or I'm not taking longs because of XYZ. Again, I'm using this as context of price and letting me build my overall ability to kind of see what that next day might look like and what my session may look like. So if I were to have an educated guess with my overall ideas for my trades this week, we may have way better breakout setups than maybe this week because we were a lot wider. Maybe this week because we were a lot more wider. Again, we still broke out, but because it doesn't work all the time. But we are having a pretty tight range this week. So we could break out to the downside or break out to the upside way better. And again, if this is where then you add this as your tool belt into your overall trade ideas for whatever types of strategy you use, high resistance, support, ICT, Fibonacci, whatever. There's the video, guys. I really hope you found this helpful, and if you did, make sure you comment down below yes it did, or you're adding to it, or if you want me to make any other types of content like this. I love making this stuff. I love you guys. Thank you so much for watching. As always, stay grinding on your goals and never let anyone tell you that you can't do something they have never done themselves. And I will see you later.